officially. All right. Good morning, everyone. Actually, good afternoon, everyone. Today is Monday, February 11th, 2013. Results from the live trading room were +6 on crude, -8 on gold, +6 on soybeans. It took us 71 minutes and 2 trades to reach our 2-point target today, and we were at +$125 a contract at that point. Okay, now everybody that's in here, just listen to Dwayne. Well, before one more thing. If you haven't taken a free trial with us, go to www.cfrn, like Nancy.net/apply. Sign up for the free trial. All right. In the free trial, you get everything you see here. 5 days in our live trading room. Access to Dwayne and I. Hopefully you'll learn how to do the trades in the 5-day trial. If not, then you know what? We have a 3-month mentoring program. All right. So you get all that stuff. Now everybody that's in here just heard what Dwayne was saying about trading and when you sit down at the desk, and how sometimes you can pick it up right away and you sit down and you know exactly what you're doing. When I come and sit down at my desk in the morning, I never have any question about what I'm going to be doing that day. I know exactly what I'm going to be doing. I know exactly what trade setups I'm going to do. I don't know what market I'm going to do it on, because I trade a whole bunch of different markets. But I do know exactly what I'm going to do. And, it's comforting to not have any doubt when you sit down. That you just sit down. It's like, as I've said in the past, when I worked in a mill when I was a teenager. You sit down, you do your job, you know exactly what you have to do, and you have to do the same thing over and over and over and over and over again. Right? That's it. That's right, Pete. Once you have defined your edge, then you just use that edge over and over and over and over again. If you do anything else, well, you're not using your edge, so you might as well be, just shut your computer off and go do something else. All right. Now, let's get into the trades, okay? All right, let's start. We'll start over here on the crude oil. It's way over here on the left. So we'll start over here on the crude, and that is where we started our morning, as it were, anyway. Let's see. This was our first trade of the day. Okay. We had... Yeah, I know. Did you see that? I had highlighted all that over there, Frank. The first trade of the day this morning that we took, we had a bearish cross right here. Now let me bring up my pictures so I can reference the pictures as well. In this particular case, what we were looking for was a cross of the MA1 below the BBC, and then a pullback toward the BBC. All right, when it didn't go all the way up to the BBC and we had the bearish divergence, we took the short trade on the close down below the trend line right here. All right, we got short right there. We took 5 ticks profit right there. That was our first trade of the morning. All right, I was looking for it to get down here to 95.14. That would have given us our 2 points in the first trade in about 6 or 7 minutes. But once it had put in 6 or 7 ticks profit, I just moved my stop up to +5 ticks, and that's where it got us out. All right. Price pulled back up here. It hit the BBC, but by the time it gave the down close, the black line was up above. So we weren't interested in going short in there. There were a couple of opportunities in here. I had to leave this morning for a few minutes. I had to take off for just a few minutes this morning, and there were a couple of opportunities in here this morning while I was out. We had the bullish cross, and let me bring up my other picture for this one. Okay, hang on. This one. Now, we had the bullish cross, the pullback test of the BBC with an up close. Right here is step 1, crossover. Step 2, the space. Step 3, the pullback and test with the up close, and step 4 is the divergence. All right. So we had all that right there. Depending where you ended on this, you may have stopped out on this pullback to the tick. But anyway, it gave another opportunity right here. The same thing, just did it again right here. After that, this is just about when I came back in right here. I had to do some stuff this morning. We had a pullback down, tested the BBC with an up close, but right here at this up close, you see the cycle is red. So you can't take the bounce off the BBC when the cycle is the wrong color. You need a confirmation of the continuation by closing above the trend line. confirmation of the continuation by closing above the trend line. That's important that everybody understands that. Okay, it's very important that you understand all that. With that, we had the bullish divergence and price moved up. Okay, now I did not take anything in there. The next opportunity over here was the confirmation of the continuation. Now, we didn't have a great divergence on the down close on this one, but it was still a valid trade because we did have some divergence. That one obviously did not go in favor, and it stopped out. I didn't take that trade. The next trade that I took was right in here. All right, we had this move up right here, and the first point to enter on this trade was right in here. I had missed that, and I did enter over here after I could draw this trend line in, and we had confirmation of the continuation by the close up above that trend line with the bullish divergence. Now, when all this was going on, I was looking at this level right in here. We needed to break up above this level. We needed to close above that level. That's what I was telling everyone. You know, when it was building this bar right here, I was looking left, and I said there's a whole lot of air above this level. If we could get an up close on this bar right here, which was a gravestone doji in context. I, at that point, had moved my stop up to +1 tick, I think. And it came back and stopped me out at +1 tick. It ended up giving a close above the trend line again, right there. I missed the opportunity when it closed above the trend line. But that's what we needed right there. If you stayed in this one, then awesome. But I had said at that point, look for it to get at least up here to 85, 86, I think. And I said there's a whole bunch of air, and there certainly was. I mean, look at that thing. It just went up and up and up, and it's still going, or it was still going. During the break, I had highlighted these couple of trades in here that were available. And that's all on crude oil, and that all happened this morning. Okay? So there was a ton of opportunity there on crude. Right here, as a matter of fact, there's an opportunity on the long side. You would have been looking to get long right there at 96.77. If you look at, there's your bullish divergence, here's your cross, here's your space, here's your test, there's your up close. All right, so 96.77. What you anticipate is that this green line is going to turn up and work its way up into the cycle. And I'll go over that on other markets as I move across here. All right, that's what you're looking at. The next market on the way across is this one. Hang on. There we go. Is this one. This is the Russell. All right. Now, right now, in the opposite direction, if you look over here on my picture, it's the opposite direction. You have a bearish cross. Here's your bearish cross. Your pull away and test to the BBC with a down close with the bearish divergence. So this is the same thing, just in the opposite direction over here on the Russell. Okay, there's your down close. Now, confirmation of the continuation, though not required. Nice to have a close down below this trend line that I've drawn on here. But what you anticipate is that this green line is going to turn down and work its way down into the cycle. All right, that's what's going on now with the Russell. Now this morning, and let me just show you the crude oil. The crude, I said 96.77 right there. All right, it's up here at the MA1 right now. It's almost at the point where you would want to reduce your risk. Let's see where that bar closes, okay? Back to the Russell. Over here in the morning, tested the BBC with a down close. Right in here was the spot to short it. It was right in the middle of the weekly trading zone, though, so you probably wouldn't have wanted to do that. Waiting for it to break out of the zone. Right in here, we'd have to go back to the other picture. Because it didn't pull all the way back and test the BBC, it just gave a down close below the trend line. All right, so you would have been looking to get short right in here at 910.2. See, as it moved through the morning, there was another opportunity in here. Back to this one. Back to this picture because it didn't hit the BBC on the pullback. All right, and it gave an up close, and up it went to the weekly trading zone. I was telling everybody that it's going to get up to 911 on this, and it did. Right now, it's got the down close below the trend line. The actual entry was right here at 909.2. Okay, 909.2. Look for the green line to turn down and work its way down into the cycle. Price action is what's going to make that happen. So I would look for that to get down here, at least down to 908.5. All right. That's the Russell. gold. Let's take a look at gold. We'll get to the NQ in a minute. Okay. Gold is a little choppy right now, but let's scroll back here. All right. Now, on the gold this morning, in here, I was going over some things in here that we went over in the partners meeting last week. That's why you see this other gray line down here right now. But let's just ignore the gray line down there for now, and we'll just say this morning I was telling everyone a down close on this bar right here, judging by what we went over in the partners meeting last week, would be a place to enter. Okay, it did work out well. There was another spot right here where it came back up, tested the BBC, and gave a down close. There wasn't much for divergence down here, but that worked out if you did decide to take that. Okay, there was one right here. Now, not every single trade wins. There was one right here that gave a down close below the trend line. Actually, that trend line should have been adjusted. Oh, wait a minute. Yeah, it should have been adjusted like this. All right, so we would have been looking for the down close over here with bullish divergence. So that was no trade in there. All right, that was when I was out, or when I had just left, I think. All right, so price turned around, and over here you can see you would draw a trend line like this. You test the BBC with an up close with bullish divergence. That is on this picture right here. Bullish cross, space, test, up close, bullish divergence. Steps 1, 2, 3, and 4 down there. Oops. Okay. So your entry on that would have been right in here. All right. Now this happened when I had stepped away for a little while this morning, for about 10 minutes. There was more opportunity if you wanted to follow that up. Okay. You could on the Dragonfly entry right there, Frank. You could. If you wanted to follow that up right there, there was opportunity. And this is one of those ones, I don't know. I said it when the crude oil was coiling up. This is one of those ones on gold where if you were in the trade, it might have been, I don't know, like up here, for instance. If you got in the trade, these bars right here might have been tough to hold on to because it was a little long in the tooth right there. But it was at a point then that these next few bars right here would have gone by very quickly once it started moving. Okay, but that was it right in that time frame on gold. Then we had an opportunity here on the short side right here. Price came up, tested the BBC, and gave a down close. Now you could have shorted right here on the gravestone doji, or you could have shorted on the down close below the trend line over here. Okay, either one of those would have been a valid trade. On this one right here, though, because we had blue on the cycle, you had to wait for the down close below the trend line. All right, that's what that was. Over here, I took this trade. I didn't love this trade because the cycle was right in the middle. I prefer to have the cycle be oversold or overbought when you're trading. It was right in the middle. I wasn't really too in love with the trade. I took it anyway and ended up losing on it. I took a stop out on that one, but it is what it is. All right, I took the trade and I stopped out. It was a valid trade. It just wasn't one of the best looking ones because we didn't have the full divergence. All right, in here we got a down close right here, and it went right down to the trend line that I drew and bounced off it. This was a valid short trade right here. We had bearish divergence, red on the cycle, tested the BBC with a down close. So that was a valid short trade right there. At the bottom of this bar right here, I would have moved my stop to break even, and I would have gotten out at break even on that had I not locked in any profit at all. No trade in here on this move up right here because the black line was below the green. All right, there was another short one right in here that I had pointed out. I believe I had pointed this out. I didn't take the trade, but I think I pointed it out. Right here on the up close, and that one again. Yeah, we talked about this one now that I mention it. On the up close of this bar, I would have taken my order off or put my stop at break even. I did have an order on here, but I didn't have an order on. I missed this completely. It was up here when I noticed it, and that's why this bar had already closed. That's where I would normally take the trade. Take the trade off, okay, or move my stop to break even. So I wasn't going to get in. I wasn't going to try to enter a trade where I would normally have moved my stop to break even on the trade. Okay. Let's see. Over here we had a down close below the trend line. This one, I think this one stopped out. Seth, this one stopped out, right? You were saying this was right at the end of the morning session. So I didn't take anything in there. But I think Seth had said that that one stopped out. It actually stopped out to the tick, I think, if you did take it. 48.8 up to 49.6. Yeah, it was to the tick if you did take it. And it did go in the direction that we had anticipated. Everything worked out except for the 8 tick stop. Then it got pretty choppy in there. And that was gold. So we ended minus 8 ticks on gold. All right. The NQ, we took a trade on the NQ. It was a break-even trade right here. All right. We had 1 full point in the trade. And we moved our stop to break even. And then it went up a little bit. Okay. The NQ, again, we're doing the same exact thing across all these markets here, guys. So it should be no surprise what we're doing from market to market. As I said, when I sit down, I know exactly what I'm going to do. I know exactly what trade setup I'm going to use. I know exactly how I'm going to execute the trades. I know what I'm looking for. There's no question in my mind every time I sit down at my desk. And that's what we want all of our partners to feel. When they sit down at their desk, we want them to have complete confidence in every single trade they place. Even if the trade, if you don't have the best criteria for the trade, like right now, this is the soybeans. Okay, the soybeans are setting up. We have bearish divergence. We need it to test the BBC and give us a down close or give us a down close below this trend line. By the time it tests the BBC, well, there's blue in the cycle, so we actually, testing the BBC is irrelevant at this point. We need a close below the trend line. Okay. But it may, the cycle portion may be sticking up or pointing up. That would diminish the potential of the trade, because the potential of the trade is the area between the green line and the cycle. That's the potential of the trade. Okay? So if the cycle starts to remove that by moving up, well, then you've got diminished potential on the trade. Right? And that's important. I don't think I've ever put it in those words before, but that's important. It's important that everybody realize that. This was the trade that I took in soybeans. We had the bullish cross, and this was textbook. You had the bullish cross, test of the BBC, with an up close, with bullish divergence. And this was the one that I took in the soybeans right here. I got long in there, and I took 6 ticks profit right up here. All right, I kept telling everyone a confirmation above the trend line is a really good thing to have, because with soybeans, once they get moving, it's like a train, and it's tough to stop. Okay. Say the important part again. Okay. The potential in the trade can be defined by the distance between the green line here and the cycle. All right. So if you have large divergence like this, you have more potential in the trade, because you anticipate that the green line is going to work its way down to the cycle. Okay, like this one over here, when I got into this, I was anticipating that the green line was going to work its way up into the cycle. And you do that on every single trade. All right, it's always the same, every single trade. Okay, even in here on my examples, right here, the green line worked its way up into the cycle. Over here, the green line worked its way down into the cycle. Okay, down into the cycle. And on this one, right here, we had big divergence. The green line worked its way down into the cycle. And over here, the green line worked its way up into the cycle. So it's always the same. Okay. All right. What time is it? 12:48. I'm gonna quickly go through the rest of these. We didn't trade anything over here on natural gas. We didn't trade anything on the euro. I'll go through those really quickly. On the ES 4-tick range right here, we had pointed out this morning, Frank, you had asked this morning about this right here. This is the spot where you would have shorted to get down to the zone. And at the end of the morning session, I drew in this trend line, and I said you would need an up close above this trend line. We never got that. Okay. Over here on natural gas, we had been waiting around on natural gas all morning, and it wasn't doing anything. But there was an opportunity right in here. We had the bullish divergence. Actually, it wasn't right there. That was a break of the trend line. But this over here is when you had divergence to go with the break of the trend line. All right, that was natural gas. Now there was one thing that we had pointed out here on the euro that went for about 50 ticks or something like that. Right in here we had the bullish cross, the space, the test of the BBC with an up close. So that was textbook. Looking at this. All right, and you see we're doing the same exact thing across all these markets. We had the green line, the bullish cross of the MA1 over it, the space in between, the pullback and test of it with an up close, and the bullish divergence. All right, and you can see that that just took off from there. All right, that was our morning in the live trading room. Again, if you've not taken a free trial with us, go to cfrn.net/apply, sign up for the free trial. If you are on the free trial with us, you'll be sent information shortly, probably tomorrow afternoon, about how to become a partner, get into the partners meetings and all that sort of stuff. In the partners meeting this week, I'll go over more information about the black line right here. The stuff that I went over last week, I'll do it again, just for clarification purposes. And then, of course, any other information that anybody wants to know. What is the difference between the cycle and the combo? Well, the cycle is one line all by itself, and the combo is actually three lines. The cycle is included in the combo. The cycle is also included in the slingshot. The combo is included in the slingshot. You see, Paul, so we built on it. We didn't change anything. The settings are the same for the cycle portion across all of it. This cycle right here that you see in the slingshot is the same thing as the cycle that you see right here, and it's also the same as the cycle that you see inside the combo. Okay, they're all the same. It's the same cycle. We just combined it with other things so that you could better utilize it, and it would be easier for you to apply it to your charts. Okay. All right. That's it, guys. I'm going to wrap up the recording here. I've been going for half an hour now, I guess. So I'm going to wrap up the recording, and we'll see you all, well, tomorrow, I guess. If anybody has any questions, you can email us at support@cfrn.net. If you have questions about the charting platform or anything like that, you can call 866-928-3310. Again, that's 866-928-3310. All right. If you have any questions for me, you guys should all have my phone number or anything like that. Anybody that's on the free trial that was in the live trading room this morning, you all have my phone number. All right, that's it. Wrapping it up.